Good morning friends, my name is Richard. I'm going to teach about money as a medium of exchange. So this is the evolution of currency. First, in ancient history what we have done is a barter system. What is barter system? Nothing but it's an exchange of goods. They will just exchange of goods. So after the barter system, what we have done in ancient history, in the sense like we will be ruled by an emperors like Mughals and Killa, like Alauddin Khilji dynasties. They have used coins. So what we are using now as 1 rupee, 2 rupees, in ancient history they have used coins in the form of gold, silver and coppers. So after that, in ancient and from the modern, after ancient era, so we have used a paper money. Paper money is still we are using, it's in the form of like a paper. So what we are using now, like 100 rupees, 200 rupees and 500 rupees. So what we have, the next system is banking. So what we have done, the extra cash what we hold per month, we will be depositing in banking. So for that, what we have deposit for savings deposit, the bank will be paying us 2% of interest. They will paying us an interest what we hold in a savings account. And if we are maintaining in a fixed deposit, they will be giving a higher interest when comparing to a savings deposit. So this is an banking system. So what the entire banking system we will be going to study in this chapter. So after getting a banking system, to withdraw the money and for the online transactions, they have given you the cards. So what is one is debit card, another one is credit card. So debit card in the sense, so whatever the money you hold in the bank account, you can able to withdraw or you can do the online transaction. Credit card in the sense you can take a loan against money. And after that, you will we will be having a online payments. What are the online payments we have do now? One is like NEFT, IMPS, and then now we are using in modern days like GPay, Phone Pay and even Paytm. So these are like online payments. We don't want to take out the money, so we're just transferring the amount through an UPI and our money will get debited in our savings account. And finally it is a crypto, like digital money. What is digital money? It's like cryptocurrencies. So these are advanced stage. In some countries they have regularized, but in India still it's not regularized. So we have to wait to get regularized. And even the financial literacy for the cryptocurrency for common people has not yet updated. Okay, so for that reason we should wait. Okay, what is the modern forms of money? So modern forms of money is in currency. Okay, so currency in the sense it's both like paper notes and coins what we are using now. Okay, so modern currencies, like it's not like precious metal what I have said, like gold, silver and commons. Now what are the modern currencies we are using? In the form of paper and coins. Okay, so in every countries they will be accepting a one form of currencies. Let us take USA. So they will be taking it, like they will be having a dollars. And Japanese, so they will be having yen. And like India, so we will accept rupee. Okay, so who is the regulatory body and who is who can able to print those notes? Only the RBI. So RBI is the regulatory body of India which supervises the currency notes as well as coins on behalf of central government. Okay, and then, so what is deposits? So basic thing, first thing, banking. So in banking what you will be doing, so you will be depositing the amounts in a locker. So for that amount, so banks will be giving you 2% of interest. Okay, so there is no compulsion that you need to take this money only through like in a cash. You can able to transfer money through checks. What is check? Okay, So check in the sense the payer who has an account with the bank makes out a check for a specific amount. Okay, so for example, you want to give 50,000. Let me think. Mr. John has to give 50,000 to Mr. Ram. So what you want to do, you don't want to withdraw the cash and you have to hand over the cashes. Okay, you just write your pay to John, like how much amount you should pay, and you can sign a specimen signature like what amount you should, and these checks will be deposited in his bank account and your money will get debited from your account and it will be credited in his account. This is how the check transfer works. Okay, and banking, they not only accept the deposit but also they will give you the loans. Okay, for example, let me tell you. Okay, so let us think like State Bank of India. Okay, they will have like more than 100 numbers of customers. Okay, so if through their deposits, if they are earning like around 1 lakh, let us think they are earning like 1 lakhs. Okay, so they won't lend all this money to the people. They will be reserve some 15 percentage of cash with them. Okay, and the rest of the amount, what they will be doing, for 1 lakh they will be giving to a depositor like 2% interest. Okay, so the depositors, this money they will be like circulating through loans. Okay, so for that loan, for that lending activities, they will be charging around 10 percentage of interest. Okay, so for 1 lakh per annum they will be getting around 1 lakh 10,000 as returns, and they will be paying to the depositor like 1 lakh 2,000, because the depositor will earns like 2 percentage, they will be earns around 10 percentage, so the profit will be like around 8,000. So that 8,000, that what they will be doing means banking will use for their salary payments of workers, administrative expenses and everything. Okay, so this is how the bank works. Okay, so that banking, they not only like giving only the credits, they also like take a loan from the even RBI also if there is a shortage of funds. Okay, and second thing, what is credit? So much of you think that loans are dangerous. There are two rules. Okay, let us have a two situation, and then first situation, Mr. Amir is having a shoe manufacturer. Okay, so he doesn't have money but he got an order of around 100 pairs of shoe. Okay, so to make an 100 pairs of shoe, it cost around 2 lakhs, but he has only 50,000. So remaining 1 lakh 50,000 he has to get a credit. So he will get a credit from a bank or individual. Okay, so 1.5 lakhs he will be getting a credit. So he will be like making 2 lakhs 100 pairs of shoes. And what he will be doing, so he will be selling those 100 pairs of shoe like 250, so 2,500 rupees per shoe. So he will be getting a profit around 2 lakh 50,000. Okay, so 2 lakhs he has credited and 2 lakhs 50,000. So anyhow he will be getting like 50,000 profit. Okay, so he will be repaying the 1.5 lakhs of loan with interest, and the rest of the amount he will be taking it as profit. This is positive role. Okay, so let us think about the negative role. So in this negative role, how the negative role plays in the sense, so let us think of farmer. He is getting a loan of 50,000 to purchase the seeds or fertilizers and pesticides. He done a crop for 2 acres of land. He spent around 50,000, but after harvest they did not get returns. It means like a crops failure. So they can't able to sell the crops. If they cannot able to sell the crops, they cannot able to repay the loan. So what is the negative impact? The farmer will be held in a debt trap. Okay, this is the negative role. The farmer will be getting like 50,000 of loan to buy pesticides, to buy seeds, and for cultivation, and every month, like everyone they are doing, and after 2 to 3 months they will be harvesting. After harvest, the crops got failure. If they got failure, so they cannot able to sell the crops. So because of not selling the crops, they can't earn the money. Without, like, if they don't earn the money, they will be held in a debt trap. So this is the two roles which plays in a loan, which is, one is positive like an Amir, like a shoe manufacturer, another is negative, it's a farmer, it's a crop failure. Okay, so what is the terms of credit? So once, for example, the bank, they will not give you the loan as it is. Okay, so they will be asking for the collateral. So collateral in the sense, you should give some collateral. For example, if you are owning a land for 1 acre and its worth is around 5 lakhs, you should pledge those land as a collateral. Okay, against the land they can give you around 3 lakhs of loan, and you can make a farming. After harvest, you can repay the loan. Okay, this is positive manner. So in case negative, because you have given a collateral as your land, if there is negative consequences, your land will be seized by bank for the non-repayment of loan. So this is collateral. Okay, this is known as collateral. So interest rate, collateral, and documentation requirements are the major terms and conditions for the banks in a present situation. Okay, so it's not only land as a collateral. You can pledge your buildings, even you can pledge your vehicles, you can pledge your livestock. Okay, so this is like a terms of credit. Okay, so there are two forms of credits. One is formal sector credit, and another one is informal sector. So what is formal sector in the sense? The formal sector means it's banks and cooperatives, because it is like banks and cooperatives are formal sector because it is supervised by Reserve Bank of India. Okay, and also the RBI monitors the banks in a day-to-day manner, and also they will monitors of maintaining cash balance. Okay, the RBI sees the banks not only like for, it's like a profit making business, not just to make profit, but also the banks will be giving also the loans to the small cultivators, small industries, and small borrowers, like with less interest. Okay, and what is informal credit? You will be getting the loans from a recent money renters or traders, employees, relatives, friends, etc. Okay, so in case in a formal, per annum, so banks will charge us around 12%. Okay, per annum. It means monthly hardly it will comes around like 1%. But the money lenders, they will be charging around monthly like minimum 2%, and it will comes around 24% per annum. So the cost of lending through money lenders through informal credit will be high. So the people will not mostly depends upon informal credit. Only if they don't have proper documents, they will be rely on these money lenders. Okay, and also there is no organization which can supervise the credit activities of the money lenders. Okay, so there is no RBI for any if it's like a person to person credit. Okay, and there is no, we cannot able to stop those unsung like unfair practices. Okay, so they through money lenders or informal credit you will be having a higher interest rate. Okay, so for that reason the government has launched a small scheme known as like a self-help groups. What is self-help groups? Okay, like I will explain you. So minimum 15 to 20 peoples will be here. Okay, 15 to 20 peoples will be like forms a group and they will open a bank account. Okay, and they will be start saving a account small amounts regularly. Okay, they will start to save a small accounts regularly to a banking. So that bank what will be doing after 1 to 2 years, they will be giving you the loans, collateral free loans to self-help groups like 3 to 5 lakhs with minimal interest. Okay, so minimal interest they will be giving you the loans to self-help groups. So what the self-help groups will be doing, they will be using those funds to start their business, or they will be lent through the groups who like individual persons who are like in their groups. So they will be making money along with this. This is majorly focused for rural poor people. Majority of the people are from rural background, poor people. Okay, so this is the chapter we have studied now. In case any doubts, if you